What if I told you that while most people panic during a recession, the wealthy see it as an opportunity? How do they turn economic chaos into a gold mine? Recessions might sound terrifying to most of us, but for the wealthy, it's like a clearance sale on investments. The secret? They're always a few steps ahead. In this video, we'll uncover how the wealthy make their fortunes grow when everyone else is tightening their belts. Let's dive in and discover how you can learn from their strategies. Number 1. Government bailouts, safety nets for big players. When a recession hits, businesses often struggle. But here's the thing. Large companies have a safety net that regular people don't. Government bailouts. These massive corporations might take risks that push them to the brink of collapse. Yet when they're about to fall, the government steps in with financial aid. Why? Because these companies are too important to fail. They employ thousands of people, and their downfall could lead to widespread economic consequences. Remember 2008? The banking industry was bailed out because their collapse would have been catastrophic. And it's not just banks. Industries like airlines could receive similar lifelines during crises. For the wealthy who own or have stakes in these businesses, this is a huge win. They can afford to take risks knowing there's a cushion if things go wrong. Number 2. Snapping up government bonds. While many people are just trying to make ends meet, the wealthy see recessions as an ideal time to invest in government bonds. These bonds are essentially loans to the government, and in return, the government pays interest. Government bonds are considered one of the safest investments because, barring a complete governmental collapse, the investor gets their money back with a decent return. It's low risk, but when the economy is unstable, it's a smart move. While others panic, the wealthy collect reliable, steady income from these bonds. Number 3. Buying stocks at rock-bottom prices. When fear strikes, stock markets tumble. People rush to sell their stocks in a panic, driving prices lower and lower. But for the wealthy, this is the perfect time to go shopping. Instead of fearing the drop, they see it as an opportunity to buy shares in top companies at a discount. For instance, during the 2020 coronavirus pandemic, billionaire investors like Bill Ackman made billions by anticipating the market's fall and then buying when prices hit rock bottom. The wealthy prepare for these moments, having cash ready to swoop in and buy valuable stocks at bargain prices. When the market rebounds, they see massive returns. Number 4. Buying bankrupt companies. Here's a scenario. A company that once had a significant market presence is on the verge of collapse due to a recession. But just because they're going bankrupt doesn't mean they're worthless. The wealthy know this. During recessions, rich investors buy companies that are going bankrupt for pennies on the dollar. They acquire everything: infrastructure, intellectual property, and even trained employees. Think of the airline and cruise industries during a crisis. While passengers aren't flying or cruising, the planes and ships are still valuable. Wealthy investors see these struggling businesses as long-term assets, waiting to be revived when the economy improves. Number 5. Real estate bargains. Real estate has long been seen as a stable, appreciating asset, but in times of economic stress, the property market can offer substantial bargains. When a recession hits or interest rates rise, many individuals and businesses struggle to keep up with their mortgage payments. This can lead to an increase in foreclosures and distressed properties, creating opportunities for savvy investors. One of the biggest advantages of real estate during tough economic times is the potential for significant discounts. Properties that may have once been out of reach can become affordable. Moreover, fewer buyers are in the market during downturns, giving those with available capital greater negotiating power. Investors who take a long-term view can also benefit from the appreciation of property values once the economy stabilizes. Rental properties are particularly attractive in such times, as more people may prefer renting over buying, providing a steady cash flow. Number 6. Taking advantage of low interest rates. During recessions, central banks usually lower interest rates to stimulate the economy. This benefits the wealthy tremendously. With excellent credit histories and significant financial backing, rich individuals and businesses can borrow large sums of money at incredibly low or even zero interest rates. They refinance existing loans, freeing up more capital to invest in other areas like real estate or stocks. This move allows them to use borrowed money to make a profit without having to worry about high interest eating into their earnings. In other words, they use the recession to build wealth at a discount. Number 7. Moving money to tax havens. One of the things that wealthy individuals dread during a recession is inflation. When governments print money to pump into the economy, it devalues the currency, leading to inflation. To safeguard their wealth, the rich often move their money to tax havens where it's insulated from the effects of inflation. They invest in stable assets like gold, silver, and cryptocurrencies, which tend to hold their value better during economic turmoil. They also diversify their currency holdings by investing in less volatile currencies like the Swiss franc or the Norwegian krone. This strategy helps them maintain the value of their assets, even when the economy is unstable. Number 8. Securing government contracts. To boost the economy, governments often start large-scale infrastructure projects during a recession. The wealthy, who often own construction companies or large corporations, are in prime position to secure these lucrative government contracts. This is a win-win for them. They make money by fulfilling the contracts while also employing more people, which helps stimulate the economy. It's one of the most direct ways that the wealthy benefit from government intervention during tough economic times. Number 9. Stocking up on raw materials. In times of economic uncertainty, stocking up on raw materials can provide a buffer against price hikes and supply chain disruptions. Businesses that rely on materials like metals, wood, chemicals, or agricultural products often find that prices fluctuate wildly during periods of inflation or economic volatility. Securing a large supply at stable prices ahead of these fluctuations can be a game changer. Take, for example, industries like construction or manufacturing. These sectors can be hit hard when materials become scarce or more expensive due to logistical challenges or geopolitical events. By purchasing raw materials in bulk when prices are relatively low, businesses not only protect themselves from future inflation, but also position themselves to meet demand when their competitors may struggle. Moreover, storing raw materials can act as a hedge. As prices rise, the value of your stockpile increases, and your profit margins are safeguarded. Number 10. Purchasing luxuries at a discount. During economic downturns, high-end goods often become significantly discounted. Luxury items such as designer clothing, premium cars, fine art, and jewelry see price drops as consumer demand wanes. For those with the means to invest, this is the perfect time to purchase luxuries at a fraction of their usual cost. Brands that typically maintain high price tags often offer deep discounts, as they struggle to sell luxury products in a cash-strapped market. Auctions, clearance sales, and special promotions become more frequent, providing an opportunity to acquire valuable items that may appreciate in value over time. Beyond personal enjoyment, buying luxuries during tough times can also be a smart investment. Many luxury items like rare watches or artwork hold or increase in value, particularly when they are limited in supply or crafted by renowned designers. For those with a long-term outlook and financial flexibility, purchasing luxuries during economic downturns offers both immediate gratification and potential future financial returns, all at a discount. Recessions may seem like doom and gloom, but as we've seen, they can be golden opportunities for those who know how to navigate them. While most people panic, the wealthy stay calm and take advantage of lower prices, government aid, and strategic investments. You don't have to be super rich to adopt some of these strategies. By thinking long-term, planning ahead, and making smart investments, anyone can come out of a recession in a stronger financial position. If you found this video helpful, make sure to like, share, and subscribe to our channel for more insights into smart financial strategies. Thanks for watching.